I want to show you guys exactly how I use my infinite banking policy in my own life and my own business, and how it's just a better location to house your cash other than or compared to a savings account, compared to using fixed debt with a bank, compared to even using a HELOC with the collateral to that being your home equity. So what I wanted to go over really quickly is first I wanted to talk about kind of what we do and I work for a company or for a firm called in Homewood, Alabama, called Nolan and Associates. We're a wealth management firm. We do all things wealth management, but work exclusively with this wealth product called infinite banking. And so we work with higher net worth individuals to create a tax shelter disguised as life insurance. So if you're open minded here, instead of taking your money and parking it in a savings account, we'd actually redirect that cash into an account under the umbrella of insurance. And so this insurance contract guarantees 4.5% of uninterrupted compound interest, which I'll get into that, 24/7 access to your money when you need it, and all while being tax free. So everyone wants to know how wealthy people don't pay taxes, right? Well, this is it. This is what allows people to stay away and under the radar of Uncle Sam. So let me just get into this really quickly here. So this is how I use my policy right here. This is a piece of real estate that I purchased in Kokomo, Indiana. It's just a flip that we did. We took some pictures. It looks nice. Okay, so here's the details of this deal and my situation at the time. I had current cash value in my infinite banking policy of $108,000. Okay, I purchased that piece of real estate for $40,000. I estimated about $15,000 of rehab, so I injected a total capital $55,000. I estimated I was going to be able to sell it for about $106,000. So after closing costs, I was going to get a check back from the title company for $97,520. And so from day I closed to from close to close, it was about 130 days. So here's the guarantees of infinite banking and this properly structured life insurance contract. So at this time, I had $108,000 in my infinite banking policy. I was earning 4.5% of uninterrupted compound interest. And so what does that mean? Uninterrupted compound interest means you are able to take that money out and the $108,000 continues to work as if it never left the policy or it never left that account. So you're able to do two things at once. You're able to build two assets, not just one. So 4.5% interest, I'm earning annually $4,860 on $108,000. 365 days in a year, I'm earning on my daily interest is $13.32. So as the days of the project, 130, I roughly earned in interest $1,731 in interest. Nothing to write home to mom about right now. That's not the point of this. Remember, this is a savings account. This is not an investment. We're not comparing this to an investment return. We're comparing this to a savings vehicle before you go and deploy this cash into a venture. Okay? Now let's look at this line of credit that I own and control. Very similar to a HELOC, only I control the payback, I control the amortization, I control everything about this line of credit, okay? Here's what I quote unquote borrowed from myself. I borrowed $55,000 at an interest rate of 5%. Yes, when I borrow money, the reason why my money continues to grow is because I'm using the insurance company's money. So you'd think to yourself, well, I'm paying 5% and I'm only earning 4.5%. That doesn't make sense. I'm losing a 0.5%. Well, hang on, let's talk about this. When you're earning 4.5%, you're earning on the actual gross principal of your cash value, okay? So think about this. It's the volume of interest. It's not the percent of interest. This is the most important aspect of this entire thing. It's the volume of interest that you're earning on, not the percent of interest that you're paying, okay? But let's just look at these numbers. 5% of $55,000 is $2,750, okay? Days in a year, same thing, apples to apples. My daily cost of capital is $7.54, okay? I borrowed this for 130 days because that was from close to close. So I was charged an interest $979.45, okay? So let's look at this number here for a second. Basically, $980 divided by the amount I borrowed, $55,000, is equal to only 1.7% of interest. That's how much I was really charged. And then if it gets really better, every single dollar of interest that you're charged goes directly back into your cash value. So here's where it really gets fun. This is what makes the whole thing come together and why this is better than any other location that's out there, is arbitrage. I'm earning, while I borrow, on my principal cash value, $1,731. I paid in interest $980. That's how much I was charged by the insurance company to use their money. How much did I make in interest? I made $750 in interest, And I didn't. So if you look at the return on my cash, I'm never cash exposed. I'm infinitely returning. And then at the end of the day, the reason why everyone loves real estate is because of the capital gain or the passive income behind it. I made $42,520 on the flip. So this is simply just a better location to house your cash because your money is always working for you no matter what. Once you park money in this thing, it's a guaranteed contractual agreement between you and the insurance company that they can never take away from you. Pumping money into this thing is early on now. The compound interest curve later on in your life is it's astronomical. I would encourage anybody out there that's interested in learning more about this to message me, to call me. Let's figure out a way that you can start putting money in these things and start getting your money working for you.